G'day everyone, it's Chris Cullen here, founder, financial planner and mortgage broker at Master Your Money Now. Well, thank you for joining us for this presentation, how nurses and midwives can buy their first home within the next 12 months. This is what we do, and this is what we want to help you do, to buy your first home within the next 12 months. Now, before we go into this, I want to say thank you for taking the time to invest in yourself to learn this information. I know how busy you are, you're between shifts, night shifts, and you've got travel plans, you want to see your family and friends, and everything that you've got on your plate. I understand you're incredibly busy, but I want to congratulate and acknowledge the fact that you are taking this deliberate step to invest in yourself to become a better person. And for that, I congratulate you for that. And I'm grateful that you've chosen myself and my team in order to help you do that. So give yourselves a pat on the back before we even begin for taking the time to invest in yourself to learn how you can buy your first home within the next 12 months. It's really exciting. I'm very respectful of your time because I know how busy you are, so I'm going to get straight into it. So what are we going to cover today? Firstly, we're going to talk about the 3 steps of a financial plan or any other successful plan. You'll take this 3-step process and you can be successful in any area that you choose. Okay? Second thing we're going to cover is what nurses and midwives are doing and also what they're not doing in order to purchase their first home within the next 12 months. Got a few tips and tricks for you there, which I'm sure you'll appreciate. And then we're going to discuss your next move. At the end of this video, I'm going to give you the opportunity to speak with myself or one of my team members for a free complimentary discussion. It only takes half an hour to go through any of the questions that you've got and how we can help you in your particular circumstances take control of your finances and enable you to buy your first home. Okay, that's going to come at later this session. So that's what we're going to cover. Make sure you take notes. There is a lot of information that we're going to be covering, and because this is a video, by all means stop the video, pause, rewind, whatever it may be, that helps you take all that information that's in this video. And let me just say, it's okay to feel overwhelmed and have a bit of information overload because we're covering a lot of information, and I know for a lot of you, you've never thought about finances and loans and super and insurances and how to buy your first home. I know a lot of these concepts are going to be new to you, and you're not going to be able to absorb everything first time. That's okay. It's completely normal. I didn't. I don't expect you to do it either. So make sure you write down plenty of notes, plenty of questions in order to get the best value out of this. And then when you catch up with myself or one of my team members one-on-one, we can have those questions answered for you. Okay? So, before we begin, now just a legal disclaimer that I've got to give to you, that the information provided in this presentation is general in nature and should not be used as personalised financial advice, as we've not taken into consideration your financial situation, objectives and needs. You should consider the appropriateness of this information with regards to your financial situation, objectives and needs. Please consult a financial planner and receive personalised plan advice in regards to your specific financial situation. That's a very complex way of saying that this video is going to tell you what you can do, okay? I don't know you, I don't know your situation yet. Hopefully that will change in the future, but I don't know your personal situation. So if you want advice in relation to your particular situation, then speak to a financial planner one-on-one, okay? Okay, so who am I? A little bit about me. I've been a financial planner now in the finance industry for over 8 years now. I've been helping everyday people take control of their finances for the comfort of their very own home. After being in the banks for a couple of years and working in various organisations for a few years prior to that, I started my own company called Master Your Money Now because I wanted to help everyday people, not the uber rich, not the doctors and those with really specialized situations. Plenty of financial planners do that. I wanted to help everyday people just like you take control of your finances and do it in a way that we're not aligned to a bank, an industry super fund, or any insurance company. Okay. So that's a bit of information about myself. I grew up in a place called Hawkesdale, grand population of 80 in the country. I live in Geelong at the moment, go the Mighty Cats. And the reason I'm passionate, particularly about nurses and midwives owning their first home, is that I'm married to one. I married my beautiful wife, Natalie, in October 2018, and she's a Kiwi as well. And I understand what nurses and midwives go through because my wife's a pediatric nurse, and that's why I'm so passionate about making sure that her colleagues, nurses and midwives, are able to have something to show for all their hard work, all their expertise, and all the overtime that you have to do whilst being a nurse. Okay? So, let's try that again. So who is Master Your Money Now? Okay, so Master Now was founded by myself in July 2018. Whilst we're based in Geelong, we regularly help people all across Australia using online technology, just like we're doing at the moment. We can talk to you via Zoom. That's what we use, which is very similar to Skype, and have you sign documents and discuss with us and go through the whole process from where you are right now. If you are in the Geelong area, by all means, you come see us, but we can do this from the comfort of your very own home, between your shifts, between night shifts, after work, whatever works for you. We want to be a comprehensive one-stop shop for all of your financial planning needs. Because here's the thing, one of the good things about it, and the banks aren't all bad, one of the good things about the banks is that you go into a bank and you've got all your financial options available to you. You can have accounts set up, you can have your insurances set up, you can see a mortgage broker, you can see a financial planner. They've got the whole kit and caboodle there for you, so you only have to go to the one spot. I think that is a good thing. It's convenient, it's easy for you, and you only have to go to the one spot. The issue with that, though, is that you're only going to get that particular bank's product. If you go into Commonwealth Bank, they're going to talk about Commonwealth Bank products. You go to ANZ, they're going to talk about ANZ products. That part of the system is not good. So what we want to do, we want to take the good bits of being in a bank, being a one-stop solution for all of your financial planning needs, but also do it in a way where we're able to look at the full suite of products and options that are available to you, so that we're not talking about one particular option for you. So we look at the whole suite for you to make sure that you're getting the best deal. Okay? We're licensed by Infocus, which effectively means there's a team in the background that you won't see, but they're making sure that myself and my colleagues are doing all the right things and making sure that we're acting in your best interest. Okay? All right. If you want more information, you can go to our website. And why isn't this going to the next slide? Bear with me a second. Okay, but that's enough about me. Let's talk about you, because this is where it's really important. How can we help you with your particular situation? So, like I said, there's 3 steps to a successful financial plan, okay? First step is figuring out where you are now, okay? And again, this doesn't matter if it's finance or fitness or career or health or relationships, whatever it might be. There's 3 steps if you want to be successful. First step is being really clear, where are you now? The next step is, where do you want to be? And then, how are you going to get there? And there's a list of questions that I've got there asking, where are you now? Like, think of your income and expenses, and are you happy with your life in general? That's how, people think with financial planner, it's all about the money. And it's far more complicated than that. I remember one discussion I had, they were so confident they wanted to buy a first home in the next 12 months, but then I asked the question, you happy being your current role? They said no. They hated being a nurse. And I know how much a drop-off rate that nurses have. They did not want to be a nurse long term. So really the discussion was saying, well, actually, maybe probably best to change career first, and then we could look at buying a first home. Because realistically, we do want you to be earning a regular income to firstly save for the home, then once you get that home, be able to continue that and to be able for the repayment. So that's a really important question. It's more than just the dollar signs, okay? We look at your whole financial situations and really figure out, particularly in step 2, where do you want to be? What is it that you truly want, okay? So we talk about a lot of those things there, and then how are you going to get there? Well, once we figure out where you are now, where you want to be, we're going to create a plan to get you from point A to point B, okay? That's the 3 steps. You can take that and apply that to any area of your life. Figure out where you are now, figure out where you want to be, and figure out how you're going to get there, okay? So where are you now? So this is what we look at. Now, this is a massive generalization, some of the information I've got up there. And obviously every case varies from person to person. But when we work with nurses and midwives, we work with a lot of nurses and midwives through this process, we generally identify some key patterns. The first thing is that nurses and midwives are generally good budgeters and they're not that flashy. Which, let's be honest, how can you look flashy? With all due respect, how can you look flashy when you're wearing scrubs to work? I mean, it just doesn't really work that way. It's not like if you're working in finance, you can lash out on a suit and, look really cool. Scrubs, let's be honest, they're not the most fashionably great thing to wear. And I say that with no expertise in fashion whatsoever, but we know that nurses, generally speaking, are not that flashy. And whilst they're good budgeters, it's quite hard to budget on an inconsistent income. We know it's particularly with overtime and penalty rates and night shifts and all that kind of thing, that nurses' incomes, it's very hard to budget on. I think nurses in the whole generally do a pretty good job. They could be definitely doing better, but on the whole do a good job considering how their income fluctuates. So they do really as well as they can there. And then salary packaging. Salary packaging is a great scheme for nurses it reduces their overall tax. If you're not doing, definitely something worth looking into. However, it does mean what we find with a lot of nurses, that they're not aware what the impact's going to be when they, and how it means that they'll have to repay extra on their HELP or HEX debt, the university debt. So that's definitely something to be mindful of if you are salary packaging, whether the benefits of the tax advantages outweigh the costs of having a HELP or HEX debt. Okay? So that's the income side of things. Again, a lot of things. Good income. Yes, it's inconsistent and generally pretty good budgeters considering the inconsistent income. Bit of a downside. We know that I think not just nurses and this is, I think, Gen X, Gen Y in general, generally have a lot of lifestyle expenses, particularly with travel. And that's something that I'm not saying that you need to not do any travel as part of this process, because, life's too short for that. But definitely something that we may want to consider is that for a short period of time, rather than going on big international holidays, it might be just shorter holidays. So that's something to keep in mind there. HELP and HEX we've discussed, and the usual costs of rent and living out of home makes it much harder for nurses and midwives to save. So that's something that we look at as part of this process as well, whether we can find some savings there. Speaking of savings, we generally find that nurses and midwives, again, a big generalisation, we generally find they've got some savings already, okay? They've generally been able to save $10,000, $20,000, which is a start, but they can't break through to that next level. How do they get enough to buy a first home? So nurses are generally already off to a good start. We want to help them take us to that next level so they're able to buy their first home within the next 12 months. And so that is something that we can help as part of this process. Where do you want to be? That's the question that's really important. Not many people know where they are now, so that's a good start, but even less people know where they want to be. And that's something, if you want to go out for a drive and you don't know where you're going, then you're just going to go round and round in circles. And yes, once in a while that is fun to do, but on the whole, we don't want you to do that. We want to have a very clear direction about where you want to be. So we ask questions like, for example, what sort of home do you want? Do you want an apartment? Do you want a bit of backyard? Do you want to live in the city? Do you want to live in the country? Whatever that might be. What sort of house do you want? Where do you want to live? That's also an important question as well. If you're looking to buy in Geelong, for example, where you can buy and build for $400,000, it's easier to get into the housing market in comparison if you're living in Sydney, and need to spend $1 million just to get a 1-bedroom apartment. Like, the conversations are quite different, and that's going to impact our plan to help you to get there. Now, the other thing that I hear with nurses and midwives a lot, they say, well, I'm not sure where I'm going to be in 3 to 5 or 10 years' time. I don't know if I'm going to stay here. I'm going to move. A lot of nurses we generally find have moved away from family in order to find work. They sometimes may want to move back. There are some options there. Let me give you a quick tip. You only need to commit to your house for a period of 12 months. The reason I say that is, with a lot of the grants that are available to first home owners, they require you to stay in your house for 12 months so you don't pay them back, okay? So once you've served out your 12 months, serves may not the best word, but it's once you've spent 12 months in your current home, you've got the option you can sell it, though I wouldn't recommend that. You can look at renting it out. You can look at rent vesting. A lot of people doing that. There's options available to you. So when we're talking about, if that's a concern to you, if you don't know where you're going to be in the long term, I'd say get into the market regardless and make sure that you only have to commit for 12 months. Okay? That's after that, you've got plenty of options. Once you're in, your first home's the hardest. Once you've purchased your first home, the next ones come easier and easier. Okay? Buy or build, that's always a good question. And that's, again, it comes down to personal preferences on that one. There is advantages and disadvantages to both that's worth considering. And do you want to live by yourself or with others? There are some important considerations to that, not only from a lifestyle perspective, but also from a financial perspective as well. There's a lot of people do get caught up if you, for example, if you do have other people living with you and they're paying rent to you, that may trigger both rental income, so that's taxable income, so you've got to pay tax on that rent, and also technically it may mean that when you sell your house, there's capital gains associated with that. So usually with a principal residence, if it goes from $400,000 to $500,000, then there's no tax payable for that. But if it's an investment property, then there is tax payable. So not saying what's right or wrong there, just saying it's something that you just need to keep in mind, okay? So how are you going to get there? This is the roadmap that we take you through. It's a 5-step process. First one is saving for a deposit. This is where most people are getting stuck. They are able to save a little bit, but they can't go to that next level. Then we talk about getting the grants. What grants are available out there for you, like the first homeowners grants. We'll discuss that in a moment. Find the home you want. That's realestate.com.au is perfect for that. So we won't cover that one much. We'll talk briefly about applying for your loan and the things that you need to be mindful of there. And then finally, move in. That's it. Once you get through all that process, you're able to move in, enjoy your first house. Okay? So we're going to discuss all of those as part of this process, but the main one I want to talk about at this point in time is saving for a deposit. Because here's the thing. There is the big mistake nurses and midwives are making when saving for their first home. It is costing you thousands of dollars in tax. I see this all the time. There is a scheme out there that you can use to, whilst you're saving for your first home, enables you to save thousands of dollars in tax while saving for your first home. You get the best of both worlds there, but not many people are using it, okay? And that scheme is called the First Home Owners Super Saver Scheme. You can use your superannuation to save for your first home. Now, the big question is, well, if it's so good, why isn't people using it? It is complicated. So I'm going to go through it now at a very high level, but I'd strongly suggest sitting down with a financial planner and going through this process because it's very easy to get this wrong and there are some disastrous consequences of doing that. But the benefits are really, really good. So let's go back here. Apologies. All right, so how does it work? This is just a simple example. Okay, so let's say you've done a couple of extra shifts and you've earned $1,000 for a week's work, just as an example. And you decide that for that, I'm going to put that into my superannuation as part of the First Home Super Saver Scheme. So the way it works is when you go, anything that you put into super pre-tax, you are paying 15% tax on that, okay? So every dollar you put into super, you pay 15%. And then on the way out of super, you're paying at your marginal tax rate less 30%. So based on an $80,000 salary, you are saving, you only have to pay, on $80,000 salary, you've got to pay 34.5% in tax. So 34.5 less 30% means that you've got $805 saved up for your first home. Okay, so that's how the process works. A little bit confusing, that's okay. Let me show you this one. I'm having problems with my clicker here, I do apologize. Alrighty, this is a few numbers here, but I wanted to put these side by side for you just so you understand the difference. So let's start from down this corner here. If you want to save $15,000 in your bank account and you're earning $80,000 a year, That means before tax, you've got to earn $22,900 in order to save $15,000 in tax, okay? Because you earn $22,900, it's taxed at your marginal tax rate, which is 34.5%. So this is your gross pay, less your tax, means your net pay is going to be $15,000, which is going to which is what's in your bank account, okay? Is there a better way? Yes, there is. Let's look at the super side of things and how this works. So, the first home super saver scheme, rather than being taxed at your marginal tax rate, which is 34.5%, it's only taxed at 19.5% based on what we discussed before. So 15% going into super, and then 4.5%, which is 34.5% less. 34.5, 15 plus 4.5, 19.5% in tax. So rather than paying 34.5%, you're only paying 19.5% in tax, which means there is $18,435 that is available for you for your first home. So same amount of hours worked, but it's not about working hard, because you already do that. If you're a nurse and midwife, you're already working hard. This is about working smarter. And by using your super, you can see that you're saving tax of $3,435, which, to put simply, for every dollar that you put into super, you're saving 15% in tax. Okay? Hopefully that makes sense. If not, like I said, it is a complex scheme, but it's what the smart people are doing that are seeking advice. The members of ours, they're using this scheme to save quite a considerable amount in tax. Okay? Now, all right, so we're talking about super. So I guess whilst we're looking at your superannuation, it's probably a good opportunity to get your super as well. Because for a lot of you, I know, most people can identify what super they have, but they've got no idea what's inside their superannuation. And I always use the analogy here of a flower pot. You see, I'm a terrible gardener, but even so when I get plants, I don't know what to do with them. I really don't. And my wife, Natalie, before we got married, she gave me a plant. And I was like, great, thanks, honey, for that. So I don't know what to do with it, but anyway, we'll see what happens. And when people were kind of like, well, what sort of plant did you get? I was like, I don't know. All I know, it came in a green flower pot. That's all I knew. I was always referred to as the green flower pot. So here's the thing. You and I both know, I'm a terrible gardener, but even I know the fact that if you are, it doesn't matter what color your flower pot is, what matters is what's growing inside your flower pot. Okay? Is there daffodils? Is there roses? Is there, I don't know any other plants, but it doesn't matter what color flower pot you've got. What matters is what's inside your flower pot. And here's the thing, the exact same concept applies with your superannuation. You see, it doesn't matter if you're with an industry super fund. It doesn't matter if you're in a bank fund. It doesn't matter what you've got as your super fund. What matters is what's inside your super fund. And the little things that you do now to get that sorted in your 20s and 30s is going to make far bigger difference than when you're 50s and 60s. Okay, so it doesn't really matter what super fund you've got. It does, maybe that's 5% of the overall picture. The 95% that matters is what's inside your flower pot. What is actually inside your super. As one example, we always talk about the power of 30 at Master Your Money Now. Did you know that if you put $30 a week into your super, every week for a period of 30 years into a high growth super account, have a guess how much you'll have after 30 years? Now, noting that over that period, you've probably put $45,000 into your super account, but once we take into account inflation and time in the market, you've actually saved, you're going to have an extra $300,000 after 30 years. $30 a week over 30 years is going to give you an extra $300,000. But here's the thing, you've got to start that in your 20s and 30s. Where most people are ignoring their super, this is the time to start getting your super sorted now. So that is now a great thing. Now is a great time to get your super sorted. And that's something we can help you with here as part of this process. Because at the end of the day, now, I know that buying your first home is a big decision. And it's a big monumental goal or milestone as part of this financial planning, your financial journey. But here's the question. Here's the $2 million question. What if you had a choice between a $2 million property and nothing else, no other financial assets, or a $2 million in super? Which one would you go for? Now, if you said the property, my first question is going to be, well, what are you going to do with how are you going to meet your bills? How are you going to pay for food and groceries and everything like that? Whereas if you had $2 million in super, you could easily draw money from that and be able to pay for rent, pretty much wherever you like. If you've got $2 million in super, you've got some options where you want to live, but also able to meet your living expenses. You see, your super is more important than purchasing your first property. I don't want to downplay how excited you are buying your first home. That's really good, and I commend you for it. But getting your super sorted over the long term is going to be far more advantageous than fixing and then buying your first home. People don't realize that. Most people don't realize that. It's not cool, it's not fun, but it's the truth. So this is why it's a great opportunity as part of this process to get your super sorted. We can talk about your plan B as well. So, those words like income protection cover, life insurance. Some people have got them inside super. They don't know what it is or what it's for. We'll talk about that as part of this process as well. And look, working with us, it's not, we do charge fees for our services. We don't work for free. But the beauty of what we do is we can charge a portion, if not all of your advice fees from superannuation. If you're wondering how much it is, really depends on your circumstances. I know there are some other financial planners that are charging for the first home, their similar program, $6,500 up front and $4,500 ongoing. Don't stress, we're not anywhere near those amounts, okay? But on the same time, I'm not claiming that we're cheap either, because cheap is nasty when it comes to your financial situation. You don't want to have the cheapest financial planner, you want the best one, the best value for money. So, and if you're wondering how we're going to afford all that, that's where your superannuation can be used to fund advice fees from super. So, which I think is a win for everyone, okay? So the point is, we can have a look at your super, making sure it's in the right options and able to get your super sorted now. Okay? Alrighty. Next question, next step, getting the grants. Now, first and foremost, your grants that you get from being a first home owner vary from state to state. Okay? So we can do the research for you. If you don't know what's your particular state, we do all that for you. But for the example we've got up here is for Victoria, just to give you a bit of a guide of what's available out there to you. Some of them are similar, some of them are different, but it does vary from state to state. But for Victoria, you've got two real key grants when it comes to your first home. So the first one is a first home owner's grant, where if you're buying or building a new home valued up to $750,000, if you are in a regional area, you will receive $20,000 towards that. If you are in a metropolitan area, you will receive $10,000 for that. So if you're saving for a $400,000 home, as an example, in a regional area, which again is very similar to what you do in Geelong, you've already got a fair chunk of your deposit there already. It's a really good scheme and something that you need to be mindful of when we're doing our plans. So when we're doing a plan, we're looking at how much you need to save, this is something that we take into consideration. And also stamp duty concessions as well. So stamp duty is effectively a tax, there's no other word for it, that you've got to pay when you're buying and selling property. Generally speaking, it's about 5% of the value of the house that you've just purchased. However, no stamp duty is payable on new or established homes bought for $600,000 or less, and no stamp duty is paid when building a principal residence. So this $600,000, that is available only for first homeowners. So if you buy your first home for less than $600,000, it's brand new, not only do you get the $20,000 grant, you also don't have to pay stamp duty, which on a $600,000 home is $31,000. It's a fair chunk. But if you do decide to build in the future, you never pay stamp duty when you are building a principal residence. Whether your first one, your fifth one, your 100th one, you do not pay stamp duty as the rules currently stand, okay? So if you wondering between buy or build, that might be some information that is useful for you. So when we're combining this with your super savings, your existing savings, and these grants, it is very possible for you. I hope you're starting to see that being able to purchase your first home within the next 12 months, where you buy or build, it's very, very achievable. Okay, there's a lot we can do here to help. So how much of a deposit do I actually need? That's a question we get a lot here at Master Your Money Now. How much do I actually need? And realistically, there's no real right or wrong answer, okay, in regards to what you don't need. Before I get into talking a little bit more about the pros and cons of that, the question we always get asked is, well, can't I just use my parents' equity? And this is a real personal question. And it really does depend on your relationship that you've got with your parents. So the advantage of using your parents' equity is that you can use your parents' equity to purchase your first home. They can give you money, or they can use their house as equity, and that can be the deposit for your first home. So you don't have to save for anything. You've already got the deposit. What I see a lot though is that once your parents are involved in this process, they own a part of your home. And here's the thing, if you want to go traveling, if you want to eat out and all these kind of things, I've seen it time and time again where parents get a little bit, shirty for lack of a better word, a little bit annoyed going, well, why are you going on a holiday? You should be paying down your mortgage as fast as you can. And this is not what we did, back in the days when we had 17%, go through the whole story and things like that. Again, it's not a right or wrong answer. I would say my personal view is that if possible, use your own savings. It's your house. You've got full control of your house, but you can use your parents' equity. I personally want to recommend it, but if you want to do it, hey, that's totally up to you. There's pros and cons in both, okay? But if you are looking to save for your first home, the absolute minimum deposit you will need is 5% of the property value. So if we're looking at a $400,000 property value as an example, you need $20,000, which is 5% of $400,000, plus costs. So when we say costs, we're talking about bank fees and solicitors and conveyances and all these kind of things that can come into the process of buying your first home. So generally we would say 5% plus costs. But here's the thing. Another abbreviation, another word that's in the financial plan and in the finance word is a thing called lender's mortgage insurance. So lender's and mortgage insurance protects the bank. It doesn't protect you. It protects the bank if you do not have a big enough deposit. So if you've only got a 5% deposit, you have got to pay lender's mortgage insurance, which in this scenario is another $14,000. Now this can be combined into your loan. I'm not saying this is technically a bad thing, but this is something that you've got to keep in mind, okay? So that's something. However, if you have a 20% deposit, you do not have to pay lender's mortgage insurance. So there's 6 one, half dozen the other. There's advantage and disadvantage of both. Now, this is under normal circumstances, okay? We open up the textbook. This is the answer. If you only got a 5% deposit, you can buy a house, but you've got to pay lender's mortgage insurance. If you have a 20% deposit, though, you don't have to pay lender's mortgage insurance. But here's the thing. We've done our research. We've looked at all the options available out there, and we know at least one provider that for nurses and midwives only, there are special deals available where you only need 15% deposit and lender's mortgage insurance will be waived. Did you know that? You see, here's the thing. When people are comparing home loans and home loans, the only thing they look at is rates. They look at, well, one's only 4% and one's 4.05%. We're going to go along with 4%. But we know that there are providers out there that give special deals to nurses and midwives because I'm not sure why, but they do. And that means that rather than having to save, in this previous example, $80,000 for a deposit without lender's mortgage insurance, you only have to save $60,000. It's a really good deal, and this is what we do on your behalf. We search the market, we look for the best deal, and it's more than just the lowest rate. Rate, it matters, but it's not the key thing. When you've got deals like that, I'm happy to pay an extra 0.05% for something like that if you can save potentially $13,000 in lender's mortgage insurance. So something to think about. And again, this is the work that we all do for you. Okay? The loan process. These are some common questions we've got here that are asked by nurses and midwives. First question is, how does the bank assess my income? And again, this varies from bank to bank. It's very hard to do the comparisons here on how nurses' incomes are assessed, because as we know, nurses' incomes fluctuate from week to week. Some banks are happy just to take your base pay. They won't take into consideration any overtime or penalties. Some take a little bit, some take a lot. There's some real flexibility between providers, and that's where we're looking at every single provider to see, well, which one does the best for you? And again, it's more than just rate. There's so many things to consider for nurses to make sure that they get the best deal. Does a credit card actually help my house deposit? In some circumstances, it actually does. The reason is, for some providers, they want to see a little bit what's known as credit history. So if you've got a credit card and you're making regular repayments and not paying any interest, that's going to work in your favor in compared to if you you have a credit card and have got no credit history. That doesn't apply to everyone or all providers. That's only some providers. So again, that's something we can talk about as part of this process, whether is that something that we need to do. Should I get an offset or redraw facility? Should I go fixed or variable? Which bank should I go with? How does my Help Hex debt impact my application? How does salary packaging tie into all this? And how do I do all the paperwork? These are all questions that we get asked a lot. These are questions that we'll answer as part of this process. I guess I'll answer that bottom one for you and just say we do 99% of it for you. The 1% that you've got to do is just sign on the dotted line, okay? We try and make this as easy as possible for you because, again, I know no one likes paperwork. I know as a nurse and midwife, you've got a lot of paperwork to do as part of your role. We don't want to add more paperwork to you. We do it all for you. We want to make life as simple as possible for you. So we do all the paperwork for you. How's that sound? Pretty good? Okay, so cautions and costly mistakes. Here's the thing. Remember I said that nurses and midwives are doing some things? We've talked about those. Some of the things that they're not doing, okay? They're just going for a cheaper rate. That's the first thing. This is the biggest mistake I see. Nurses and midwives, they just go online, go to Choice and just search for the cheapest rate. And I assure you that is not the right thing to do for the reasons that I've discussed above. What I refer to that as pinching pennies and missing millions. And that's something to be mindful there. It's more than just the rate. It's important. I'm not saying you go to the highest one, but it's not the only consideration. They go into their bank they've been with since they were a kid with a Dollarmite account. We know which bank I'm talking about there. So you can go in your bank, you can get a loan. Yes. Is that the best loan for you? I would argue no. Because, well, firstly, how do you know? Surely it's better for you to actually look into and see which one is the better provider for you. And there's about 34 mortgage providers at the moment out there in the market. And trying to get the best one for you really depends on your circumstances. So look, don't just go to your bank. Go and look at the bigger picture. They don't use their super to save for their first home. As I said before, you can use your super to save for your first home and save thousands of dollars in tax. And the thing I just remembered then is if you're part of a couple, you can use your super and your partner's super to save the first home. So both of you can benefit from using your super to save for your first home, okay? Something to think about. They speak to the wrong people. They don't speak to people with experience dealing with nurses and midwives. And they only go and speak to people who are specialists in one area. You see, you can go to your mortgage broker. And I'm not saying, hey, well, I'm a mortgage broker too. I'm not saying it's a bad thing, but they're not going to talk to you about your super. They're not going to talk to you about your plan B. They can't. By law, they cannot. Whereas, but we've discussed, they're equally important, and your super, I'd argue, is actually more important than your first home. So this is what we do at Master Your Money Now. We look at just more. We look far more than just your first home. We're looking at the bigger picture. We're looking at your long-term financial journey to see, well, what can we, how can we grow your wealth and have something to show for the 30, 40, 50 years that you're going to commit to your working career, okay? They don't look at the bigger picture. Like I said, it's more than just buying your first home. They don't get advice. They try and do it all, and they try and do it all themselves. Let me put this out here. Should I DIY my health? You're a nurse. You're a midwife watching this video. If I came to you and said, look, I don't think I need you. I'd rather do this all myself. What would you say to me? Seriously, how much of a Fruit Loop do you think I would be? As an example, I've got a good O week. Woke up on a Tuesday morning, I think it was, and I had a pretty cooked stomach. I wasn't drinking, all right? I wasn't drinking that the night before. I just woke up with a cooked stomach thinking, oh, this is not good. I want to join my O week, but something wasn't quite wrong. By Tuesday afternoon, I was doubled over in pain. I'm thinking, man, I'm not in a good situation here. I really need to seek some advice from a health professional. I went to my GP. Thank God I was able to see them that day. They did the pressure test, and there was one spot he pushed on it, the doctor, and it felt like a knife going through me. And once he did that, he said to me, you need to go to emergency right now. See, what was happening to me, I had acute appendicitis at the time, and so I needed to go to surgery to get that removed. You see, the only reason that I knew that, though, is because I sought advice from a professional. So this is my question to you. Why is it that I should not be DIYing my health? So why should you be DIYing your financial situation? Something to think about. You don't need to do this all yourself. I know there's a big movement about DIY your finances, and you can save money and all this kind of thing, blah, 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 blah. I'd argue that's completely false. And it's it's DIYing your finances just as silly as DIYing your physical health, okay? And here's the thing, if information is all that we needed, we'd all be billionaires with six-pack abs. Someone very smart said this recently, and I thought, this is so true. You see, the reason why is all the information is out there. That you need is out there. You don't need more information. If you've watched this video, you can do a bit of research on Google. You have all the information that you need. What you need is not more information. You've got Google. What you need is a plan and someone to hold you by the hand, cut through all the noise, and tell you step by step what you should be doing. Because there's a lot of noise out there. I know all of you watching this know you need to be doing something. You just don't know what. What we do is hold you by the hand and cut through all the noise, all the YouTube and the Wikipedia and all the experts, and tell you step by step about what we should be doing. What you should be doing, sorry. So you have a choice. Right now, you have a choice. You can do a DIY option. You can research all the options about your super insurances, your mortgages. You can do that all yourself. You can use Google. You can talk to your salary super providers. You can do all the paperwork payroll about getting all this in place. You can speak to your bank. Good luck to you. You can get your insurance yourself, talk to all these people, and do this all between your night shifts and your weekends away and your holidays and all that kind of stuff. There's a lot of work involved with the DIY process. That's one option, and it's an option. If you want to do that, I wish you well. But I actually prefer this option, which is get DIFY, get it done for you. Get it done for you. That's the best option for you. You will have one trusted source of contact. That's it. You'll talk to one person when you're dealing with this who manages you through the whole process, from saving to your first home, purchasing your first home, getting the mortgages, and then in the future as well. We want to continue on that process. We specialize in first homes for nurses and midwives. We've helped plenty of nurses and midwives in the past. We'll continue to do so, and we hope we can help you with your situation. We do the paperwork for you. We do it all for you. All you got to do is sign. We want to make it as easy as possible for you. And even, for example, like if we wanted to put extra into your super, we will provide a letter to your payroll that has all the information that they need. So you just got to give it to them. We make it simple for you. we want to make this process as easy as possible for you. Because look, buying your first home is stressful. I'm not going to lie, it is stressful, but if you got someone doing the process with you, you can make it a lot less stressful, okay? We can speak to people on your behalf. So for example, using the payroll, we've spoken to a lot of payroll providers because they can be tricky getting things done. So we can speak to them on your behalf. Reduce your stress and hassle, delegate. You've got enough work on your hands. You've got enough things on your plate. Don't try and do everything yourself. Delegate where you can. So you can spend more time enjoying life and move into your first home within the next 12 months. Okay? Now, here's the thing. Who do we work with? Because we don't work with everyone. Sorry, I've just realized I'm in the wrong slide there. But we don't work with everyone. We work with people who are, who are coachable, who are who are regularly, who are open to advice, and also are willing to do the work required in order to move into their home within the next 12 months. So here's the thing. Imagine you're getting the keys to your first home 12 months from now. Imagine that feeling. Just take a moment to really think about that. How does it feel? What would be next for you? What would you want to do next? Do you want to buy another home? Do you want to use that as investment so you can live overseas? Do you, or are you happy where you are? What are the options there for you getting your first home? That's why we do it, because we want you to enjoy that feeling of owning your own home, a place that you can call home, a reflection for all the hard work that you have done, not only for your working career, but also the 4 years of university, the 13 years of schooling and education as well that you have done in order. This gives you something to show for all of your hard work and effort. So I want to invite you to, I've got an invitation to a complimentary discussion with myself or one of my team members. We answer all the questions that you have for you and answer your questions and concerns. We understand what you want, because it doesn't matter what I want. It really doesn't matter what I want. It's what you want. So we listen. We listen to what you want and see if we're a good fit. Because actually, the slide I was thinking about before just come up in next. But it enables you to see if we're a good fit and see if we're able to work together. So like I said, we don't work with everyone. We do not work with people who are not coachable, who want once off, set and forget. We don't believe in set and forget. We don't want to leave you. We want to have a lifelong journey together. We want to continue on that we're able to catch up on a regular basis beyond buying your first home. We want to be there to help you buy your second home and your third home and investment properties and build wealth and all that kind of thing. We're here for a lifelong. That's what we're looking to do long term. Okay. Have no accountability. We know there's people out there that are happy to blame everyone else but themselves. Sorry, that's not who we work with, and do not appreciate the value of advice. As nurses and midwives, I know people should be appreciating the advice that you give. I know there are people out there that don't, and so be it. You can't help everyone. There are people out there who do not appreciate the value that you bring. And so we expect the same as well. We don't work with people who don't give us, who don't appreciate our advice. But who do we work with? We help everyday people. I don't think of someone who's more everyday than nurses and midwives. Nothing wrong with that. We want to work with people, everyday people. We speak everyday language. And hopefully you got out of this presentation that we work with everyday people in everyday language, making it simple to understand for you. Are coachable and open to learning. That's really important. Acknowledge they don't know everything. Hey, here's the thing. I don't know everything. Even I've been financial planning for 8 years. I don't know everything. There's always something new to learn. And then don't get me started about nursing and health. I have no idea about, I know what goes on, but in terms of specific drugs and treatments, all that kind of stuff, I've got no idea, okay? No one likes working with a know-it-all, okay? So it's nothing wrong saying, I don't know this. That's okay. I don't know everything too. I know I know quite a lot about this process of how you can buy a home in the next 12 months, but even I admit I don't know everything about this field. I don't expect you to know it either. Not knowing everything is a good thing because it means we can work together. Long-term partnership. We want to enjoy the journey together, okay? Aspirational. You see, I had a great client conversation. It was only last week. They've been a client. We've set up their super. They set up their insurances. They randomly called me, wanted to have a chat, and that discussion was pretty much, well, now we've got these basics sorted. Now what? What's the next step? I love working with people who are aspirational, always want to think about the next step, because there's always a next step. Buying your first home is step one. There's plenty more steps that you are going to take in your journey in order to, there's always going to be a next step, and we want to help you through that process. We'll refer their friends and family, hopefully, when we discuss and you work with us, you'll speak to all your friends and family about how great we are, and as a result, you'll refer your friends and family. And the reason why I talk to you about that, because we actually incentivize you as well to refer your friends and family as well. Something to think about. I'll talk about that later. Fun. Look, I know that finances can be quite dry. So we want to work with people who are fun and are fun to deal with. Life's too short to deal with miserable people. And look, in financial planning, I know a lot of rich, miserable people. I don't want to work with them. I'd much rather work with broke, fun people. Not saying that you're broke, of course, but I'd much rather work with broke, fun people than miserable, rich people. I really do. It's no fun with me. Yes, I can make a lot of money off them, but it's not something that I want to do. I'd much rather work with people like you who are fun, who are traveling, who are interesting, and also want to, grow their wealth. Okay? And live a life that's bigger than themselves. Here's the thing. Yes, step one, buying your first home. Once you get a few levels down the track, the question we often get asked is, well, what's next? I've got enough for myself. How can I help the community around me? And that looks completely different for different people. I know, like your nurses and midwives, I know you care for people. It's just part of your nature. Here's the thing. What is the thing that makes you, that you really care about? What's that particular one cause, whether it's mental health, the environment, kids, whatever it might be? What is that one cause that you are passionate about? And what we do as part of this long-term process, this is further down the track, is we ask yourself, well, what can we do from a financial perspective so that we're able to help you help others, if that makes sense, okay? Because ultimately, you have $10 million house and 4 Ferraris in the garage, so what? Seriously, so what? I've dealt with these people and just go, so what? We want to work with people who can look at that and go, well, I've got enough for me. What's the next step? Okay, how can I help others less fortunate? Okay, so that's who we work with. So if you relate to a lot of those things, I want to have a discussion with you. Because here's the thing, it doesn't matter where you are now. It doesn't matter. If you're broke, you've got no savings, that's okay. We can still work with you. Because it doesn't matter where you are now. What matters is where you're going to be, and are you willing to do what it takes to get to where you want to be, which in your situation, in this particular video, it's enable you to buy your first home within the next 12 months. That's the challenge I have for you. Okay? So here, I want you to book in your complimentary 30-minute session now. You've stayed with me for, it's coming up to an hour now. I really appreciate everything that you've done, your time, and hopefully you've got a lot of value out of this. I want to have a discussion. I want to get to know you, listen to what's important to you, and figure out a plan that we can work together in order to help you to purchase your first home in the next 12 months. Okay? So if that's something that's of interest to you, what I want you to do is go to the booking screen that's around here somewhere. I'm not sure exactly where, but there's a booking screen that you'll be able to book in a time with me, and we can do it via Zoom. I'll give you the links in the instructions for that. Or if you're in the Geelong area, you can book in our Geelong office as well. Whatever works for you, that's totally fine. In terms, if you're not comfortable with dealing with online financial planners, the only thing I'd say is if your friends and family are on Facebook, why isn't your financial planner? It's exactly the same process. So if you're wondering if that's a good idea, have a 30-minute discussion with myself and one of my team, and we can discuss that for you. Give us a try. That's all I ask. Give us a try and see if you want to work with us to buy your first home. Regardless, hopefully I'll speak to you soon. But yeah, whether I do or you don't, I just want to wish you all the best. I want to thank you again for your time and for taking that time out of your busy schedule and looking to invest to purchase your first home. And hopefully you've used this you can use the information in this presentation to help you to master your money now. Thank you, everyone. It's Chris Carlin here. Hopefully speak to you soon. It's booking your strategy session now, okay? Bye.